Hello, Randy. Thanks for joining us.
Hi, Jolene. Hello, William. How are you?
I'm doing well, thank you.
Good.
So William is our presenter that's going to be speaking about USDA Rural Development, and Randy is our speaker from CorTrust Bank.
Excellent.
So Randy, just wanted to let you know, we do have a pretty low attendance, but I had a handful of people that are interested in reviewing the recording because they couldn't be online this afternoon. So it will still be valuable for us to record this and share it on our website for those who couldn't catch it initially. Sure. And I've had some recent questions about SBAs. So we're going to be especially interested in hearing what you have to say.
All right, good.
Yeah.
I hope I have all the answers.
I'm sure. So we still got a good 4 minutes. I'm going to mute myself and take care of a couple other tasks, and I'm going to be watching the waiting room.
Thank you.
Welcome, Rob.
Thank you. Thank you.
Thank you for joining us today.
For sure.
All right. We are coming up real close on 3 o'clock. We still have 2 more minutes. I see we've got another guest that has joined us. Just wanted to let Rob know that our attendance is a little bit low this afternoon, but I've had a number of people express that they're interested in reviewing the recording when on their own time when it's available, when they're available. So it's still going to be valuable for us to have this information out on our website. And I'm really looking forward to hearing what you have to say. And as well as our speakers, Bill Bach from USDA, and of course, Randy from CorTrust Bank. So looks like we've got another one joining, and we got another full minute before we want to get started. I'm going to be recording it. I've actually started the recording already, so I wouldn't forget.
I've done that a couple times.
Yeah, that's no good.
No.
How are things going for you this afternoon, Rob?
Good. Good. Just, I enjoy air conditioning.
Yes.
So this weather's perfect for that.
Yeah, absolutely. It is really, really warm again. I had a Annandale Chamber of Commerce luncheon at the golf course in Annandale, Southbrook, and we were indoors. It was pretty nice there, but I saw a group meeting outside on the patio, and I don't know how they could do it. It's a good 95.
These patio diners, I don't know. They're a little crazy.
Yeah, maybe not quite in this amount of heat.
No, definitely not. There's actually on a side note too, I was thinking about you yesterday. So we should, I'd like to just grab you for 10, 15 minutes and pick your brain on something. So
Sure. Yeah, we can discuss after the event here.
that works.
So here we are. It is 3 o'clock. And so to respect everyone's time and keep things rolling smoothly, I think we'll go ahead and get started. We expected 3 more, but maybe they will be able to join us as we get started. Today, we are discussing financing and opportunities for small business in Wright County and the different varieties of funding techniques that are available. And so today, I think we're going to start with Bill. Bill is working with USDA Rural Development, and he is a loan specialist. And I feel like he's fairly new at the position, he has mentioned to me. So we're really excited to hear about the programs. We know that USDA has a lot to offer. And so, Bill, if you're ready, I'll go ahead and let you introduce yourself to our group. We are recording, and you go ahead and take it from here.
Yeah, Jolene's right. Fairly new at this at the commercial end of loans. So I came from the residential side, and now I got to learn 11 different loans and grant programs that the rural development has to offer. The slideshow I have is kind of you'll see it has 3 different prongs to it. I'm only involved in one of them, but I can kind of scoot through it a little bit and our website that we have that's listed at the end of it too is probably the best resource that we get people that's people call, and I direct them right to it. It tells pretty much everything about the programs, how to apply for it, and that kind of thing. But I'll click through the slides here. My first presentation, like I said, I've been here just a couple months, and I was going to pass this to my program director, but he's on leave. So here we go. It's like I said, my name is William Bach. I'm the loan specialist for the East Central region. There's 5 regions in the state of Minnesota. So Wright County is actually one of mine that I cover. It's we have 40 different loan grant and technical assistance programs. Like I said, I have about 11 that I have to kind of learn here going through this. So, we got rural development, and then I'm in the rural business. There's rural housing, and then the utilities. The housing program is kind of for repairs, home purchase. Utilities is kind of water and waste programs, some broadband in there as well. And then the different areas, here's the different offices. I didn't know we had that many offices really until I got here, but I'm in the Cambridge office. Like I said, there's I think 11, whatever there is, there are 12 or 13 offices across the state of Minnesota. So
Bill, do you mind if I interrupt you for a second and ask
Yeah.
questions while you present?
Sure.
I was just noticing on that list, it doesn't appear any of those offices are here in Wright County. So that means that you are our contact for Wright County?
Yep. So I'm the contact person. Yeah. So I wish I had a map. I should have put a map slide in there, but yeah. So I'm the contact going forward.
Perfect.
There's 5 actual specialists that do the business, the commercial end of it. So some of those that you'll see on there, like Marshall, Virginia, those are the single family specialized in maybe the farm service, stuff like that. But those are just the offices we have across the state there. Faribault is another office that we have that does the business. Wilmer, Detroit Lakes, and I want to say Bemidji are the 3 that are 5 that we have going across the state that do the business loans. So that's kind of Detroit Lakes is where the program director is, Andrew Gagg. So he's the one that is in charge of business programs. So some of the business programs that we have right here, these ones here, we're doing the value added right now. I'm really kind of new to the stuff that we have, that one there especially. We'll get to the one that I kind of just worked on, but the red leg, they call it, they're all the acronyms. So I never kind of knew that. You got to kind of get used to the government, the way they talk. But the RBDGs, those are grant services there. We don't get a whole lot of these. We get, from what I can gather, the red legs are kind of not, I mean, none of these three are real. I mean, I think we just got done doing the value added, and I think I did 2 of them, so there's not, we're trying to get out there. We'll get some outreach and get out there and do that. But, they're designed for, to provide technical assistance and training for small businesses. All of these things, the funds can be used for any kind of project or business planning to, land acquisition or development. And a lot of the time, like we just got done, March 31st was kind of some of the deadlines for some of these programs. We're kind of going into the next year. You can still apply for it, but it won't be, looked at until next year. But the B&I have done none of these, obviously. These ones here, like I said, we kind of go in cycles with all these, is what I'm kind of learning as well. What I was told, basically, I kind of took notes on, basically, is a lot of hotels and resorts are very, very popular in this B&I loan guarantee. And I think the SBA has the same kind of product, but we go up to 25 million, is what I was told on that one. And like I said, I'll show you or give you the web address for you, or that you can see that it gets way more detail than what I'm kind of giving you. But and it also it can be also used to acquire a business when the loan will keep it from closing, or to create or save jobs. A lot of these things, we want to know how many jobs it's going to create in a rural development. Rural development is a city, that's under 50,000. So Wright County is, falls in that, I think. In a
That
lot
was
of,
it. That's great information. The next question I was going to ask is, how do you define who would
Yeah.
qualify for these rural development grants? So you're saying any community with a population of under 50,000. That's
50,000, yeah, under 50,000. And it goes by a scoring for the most part. We score these on a scoring system. So
wonderful.
Here's kind of I think the one that we really, and I'm finding this closed March, the Rural Energy for America program. That's our biggest program. We take, I think we did about 180 applications for that one. 25% of it is a grant program. You'll see a lot of windmills, the solar, the grain dryers, a lot of farming qualify for that. And we get a lot of applications. Like I said, we took 180 applications just in Minnesota itself. So we get kind of bombarded with that one. That one actually closed too on March 31st. There's windows of opportunity to apply for some of these that we, once it closes, we just stop taking them until the next year. We call it the REAP, the Rural Energy for America program. The REAP program, we take that year round, but you wouldn't actually be, in the mix until next March when we go through it again. So that's, I think, our biggest one by far, that I know of, and just in my training and stuff, that the stuff that I've learned, that's the one that we kind of take a lot of applications, a lot of solar projects we do. So a lot of farmers get a lot of help with that kind of stuff there. So, and grain dryers is another one that I did a lot of. So, and this kind of tells you kind of just what I told you, but like I said, the wind turbines, renewable, we're trying to get the renewable energy out there to the people that need it. Kind of, I think I kind of said that, but the hydropower, there's the geothermal. So there's a lot of stuff that this program really, and it's, like I said, it's by far the most popular. A lot of farmers and people in that industry use that. So These here, the new cooperatives improve the operations of existing ones. We have 150 co-op publications. Many are available in a hard copy, but ranging from basic co-op primers to in-depth reports on technical topics to report that focus on co-op economic theory. I haven't done any of these things, and these aren't used very often. I know we've got the socially disadvantaged grant coming up, but from what I can gather in our last meeting at the beginning of the month, we don't see many of them at all. So not that we shouldn't be out there trying to get some of them, because I think we lose some of the funding on that when we don't go out there and do that. But
So Bill, I have a question about that one. Could you define who the socially disadvantaged group might look like, or what groups are we speaking about? Would this be minority groups or women owned?
Yeah, yep, all of those, all of the women owned,
Minority owned, and
minority, oh yeah, all of
then
that stuff.
veteran owned. Do veterans fit in that
Yep,
category as well?
yep,
Okay,
that's in there too. So it's
all right.
I'm trying to just click to it, but of course I'm not. But yeah, so that's the one that they would qualify for that.
Super.
And I don't, like I said, I'm trying to go to a different screen to look, but
It's okay.
I don't even know what the maximum is on that as far as what the grant can be. But most of them, like the ones that I just talked about, the REAPs, they usually, the grants that we kind of score high are usually under 20,000.
Okay.
The grants that for the REAP program, I guess, and I kind of could have said that a little bit in the last one I just talked about, but once you start getting into higher grant amounts, the points that we award it's all calculated, but so a lot of, and I think a lot of people know that that are applying for them, so they'll, and it can only be 25%. So if it's more than 25%, they got to cover that pretty much, the difference. So it's they kind of know that, they don't really try to go over 20,000 because they know that's kind of the number that will kind of knock their scoring out. It's all done competitive scoring. So the higher the score, they compete first,
Okay.
So that's kind of how that works as far as that goes. Now they kind of get into rural housing. I don't really do any of this stuff, but there is that.
Sure, Bill. I just want to keep you on track. We are at 3:13, so I think you've got about another 2 or 3 minutes to sort of run through.
I don't think there's anything left really. The single family housing, there's no down payment. It's based on income. And there's the loans and grants that they have for that. But I just wanted to kind of throw myself out there. The community facilities, the hospitals and stuff like that, we do a lot with that in that utility service. Broadband, I talked about that quickly. Water and waste, that's not what I do, but we do have that available for improved infrastructure. And then here's our information right here. I would be the contact here. There's my phone number there. And I think more so if you guys have questions or, like I said, going forward, this website right here is what you really want to write down, keep track of, whatever the case may be. You can go on there and it tells you how to apply for it, what exactly the grant amounts are, and everything possible. If you have any questions, you can call me. I might not have the answer, but I will find the answer. So, I just want to, say thanks for contacting me. You caught us when we're kind of in a transition of getting a new guy on the block, and I had 2 people kind of bow out of this. It would have been a little bit more smoother, but
Bill, I think you did an excellent job.
Thanks for, having me. And like I said, hopefully in times we'll be able to do this stuff maybe in person. We can do.
Yeah, I think it's good for us to be reminded about all these programs out there, especially in Wright County where we have smaller communities. And I think it's something people don't always think of. So it was very, very helpful. In our last 1 minute, can you give me an example of the most recent type of business or something that you see commonly that you would be working with and that might be successful in getting one of these kind of grants or loans? Like what would be a common project that you just recently helped somebody accomplish?
Yeah, I mean, I'm doing it right now. Like I'm doing the letter of commitments. I just gotta have them by Friday. And it's just basically just you know, somebody's grain dryer, an old grain dryer that it's just not dry, you know, not drying the product, the produce, whatever they're dry, you know, so we go in there, they just request, they want, how much did they put down, how much the grain dryer is going to cost. So we get, like I said, I did 40 or 50 of those things in solar. So I don't know if you really can't really give a great example, but
Yeah.
you know, they want to replace the old solar system that they have, and then with a new, more, all you got to have it do is just be energy efficient, more energy efficient than the last one.
And they could find possible grants and loans.
Yes,
Okay.
grants and loans for, grants and loans for that, yeah. Yeah,
Super.
like just real quick, the red leg, the one that I said, the RED, the red leg loan, that's 0% for 10 years.
Awesome.
So, you know, there's programs out there that you can get, and like I said, the grants, you know, they're free, you know, they're out there to get for the people. Just like I said, the website is very, very helpful. It tells you everything about what you got to do.
That's fantastic. So again, this is recorded. Anybody that watches this will have access to this slide. And I think you did an awesome job, and we will certainly have you back in next year to remind everybody about the awesome programs that USDA Rural Development offers. Thanks
Yeah,
again,
hopefully,
Bill.
next year I'll have it all.
You did pretty darn good.
So,
All
thank you,
right.
Joey. Thank you
Yeah,
for having me.
absolutely.
Appreciate it.
I think what we're going to do is we're going to move on to Rob Edward Jones, and I think I'll ask you to present next. I do see we have added another participant, so thank you for joining us. I didn't get a chance to greet Kevin. I said hello to Jonathan. I'm happy to see that we've got some representatives here from the SBA and from our community development as well. And so great to have you guys here. And Scott's here from Xcel Energy. I don't know if you can hear my phone ringing, but I apologize for that. I'm going to head and hand it over to Rob. Rob, go ahead and take over. If you want to share screen, I'm going to make you the co-host real quickly here. And you go ahead and give us a rundown of what goes on in the life of Rob Stark at Edward Jones.
I don't know if you really want to know all that detail, but no, this is great. I'm thankful for the opportunity to come speak, and it's just I love the group, so it's good to see Jonathan. I haven't seen you in a while. Hopefully, one day soon we can grab a happy hour or something. But yeah, so Edward Jones, I think that the one thing that I will touch on that Bill talked about was my first rule for anybody, whether it's individual or business investors, always make sure you're taking away free money. So that grant money is huge. So to anybody watching on the recording, that would be the first thing I'll pass on. I thought I'd just take a couple of hot topics that that's been kind of timely for me in my practice. That I'll talk to both individuals and business owners on. So first is just the idea of Roth money. Roth is simply tax-free income later on in retirement years. So what you do is you pay the tax up front on that money, and then they'll convert later into be a tax-free income stream for you. You can see here on a traditional, or not a traditional, but a Roth IRA, just a standard IRA, not a business retirement plan. You can see there's some income requirements that are in play, depending on your tax filing status. But generally, it's about $200,000 is where you kind of have to start, playing a little bit of the shell game of how much you can put towards a Roth versus a traditional IRA. It kind of works a little bit differently with a Roth 401k. But I would say this: anybody who's less than 60 years old, where retirement is about at least 5 years away, you should really be thinking about creating that bucket of Roth money as much as you can. A lot of at least my parents of my generation, they were used to maybe a pension or some sort of a qualified traditional 401k for retirement purposes. And those are great from a tax perspective, but you're kind of kicking the can down the road. These are right now are historically low tax rates. Just a real quick idea, where we were at back in 1986 when Ronald Reagan was in office. He's the last president in office that did any kind of true tax reform. And if you were married filing joint, if you made $180,000 or more, for every dollar over that, you gave the government back 50 cents. So in other words, if you made a $200,000 combined income, married filing joint, that $20,000 over 180, you would give 10,000 to the US government and then take the other 10,000 back. Currently, that is about $375,000 for married filing joint at only a 24% tax rate. So the idea, I bring that up because you can convert some of your tax deferred money from those old traditional IRAs, maybe you have an old rollover, 401k if you're over 59 and a half, and you can start doing some Roth conversion with that money. And so that I just think is the most effective way that you can really build for your retirement, let's say. Again, that tax-free income stream is huge. You don't pay any capital gains tax. You pay no penalties as long as the money sits for 5 years. So for more information on that, you can reach out to me for that. I can send that out. Matter of fact, all the material I have, I can send it out. Just send me an email. So I thought one thing that would be a little bit more appropriate here is sort of the business retirement plan. So for businesses with no employees, so your solopreneurs out there, there's generally going to be 3 different options that we're going to look through. And really, it's going to be your income that'll help, or how much money you want to tax shelter is probably the better way to frame it up in terms of what option or options might be better for you. Your SEP IRA is your kind of your traditional IRA for business owners. You have some income limits you can see there. It's either 25% of your compensation up to $58,000 a year. So if you're reporting more than, call it 230, I think it's 233,000 bucks. Anything over that, you can max out at $58,000.
Rob, I want to stop you for 1 second. Do you think you could zoom that document up a little bit so we can get a little bit better visual on the text?
Is that better?
Otherwise, you're doing great. Yeah, that is better. And I think it's great to look at the business retirement side of things. So thank you for thinking of that.
Absolutely. And it's going to be a little bit different with employees. So that'll be coming up next. So the owner, the solo K or the owner only 401k is another option. And this you can set it up with either traditional, qualified money or Roth money, depending on how you want to do it. So again, you can see the income limits there up to $19,500 unless you're over the age of 50, and they get an extra $6,500 to catch up with, again, a max of 58,000 bucks. So owner only defined benefit plan. So this one here. This is the one that a lot of folks aren't. It's becoming a little bit more popular, but up in the last couple of years, not a lot of business owners realize how much money they're leaving on the table. So when you're looking for that tax shelter, you can see here, you can put even over 100,000 bucks into one of these plans, depending on what your situation is, and that'll be on top of your 401k. So in other words, you could sock away, over $160,000 and hide that from the U.S. government for a portion of time until you decide to take income from those buckets of money. But you can imagine what some of the tax benefits there might be. All right, and feel free, shoot out any questions along the way. It's pretty laid back presentation. So with employees, here's going to be 3 steps or 3 different ideas. Some ones is simply IRA. This one's great because it's a cost-effective way to set up a retirement plan. It's going to be your most cost-effective, but you have a lot more limitations for that. So you can see up to $13,500, or again, there's a catch-up provision over 50. The bigger piece where a lot of companies will go, and generally, if you're looking at headcount, if you have up to 10 employees, a simple IRA is probably going to get the job done. Anything over 10, you really should start considering a 401k. And I think there's a lot of misconceptions out there. So again, whether you talk to me or another financial advisor out there, we can kind of walk you through what some of those benefits might be at a 401k. It doesn't have to be as daunting, or you think it's expensive, and it really will not be expensive if you run the numbers. So you can see here again that same $19,500 or $26,050 or over, and the employer may or may not, depending on how you structure that 401k, if it's safe harbor or non-safe harbor, there could be different ways you could structure that employer contribution to the employee. And then you can see there's also custom plans you could do. They're getting pretty fancy now, and it's no longer the straight, if you contribute your 3%, you get 3% back. There's different things you can do within a retirement plan, and depending on what your situation is, may or may not be applicable. So I think whether you meet with me or someone else, here's the 5 things. I thought this document does a great job of kind of highlighting why you'd want to reach out to somebody. The one thing I would encourage businesses to do, we all benchmark our healthcare plans every year, right? We're always talking about healthcare premiums going up, and how do we manage that? If you haven't benchmarked your retirement plan at least every other year, you're probably paying too much. So it doesn't cost you anything. It's just a couple documents you need to get, and we can run a pretty quick analysis to see where there might be opportunity or if indeed you're okay. But either way, you should be benchmarking your retirement plans just like you would for your healthcare plans. So you can see here those 5 things. I'm not going to go through all of them, but the biggest thing I would say out of all of that, if I had to wrap it up in a bow, if you're not meeting with your advisor who holds the plan annually, in the very least, you should be. And you should be holding your financial person to that standard, and they should be meeting with employees one-on-one to make sure that they're getting something out of the deal. Okay, you want to make sure that your employees are being taken care of. It's a free benefit. Well, it's not free, you're paying for it, and you should be getting that level of service back. And the last real meat and potatoes thing I had that we don't talk a lot about, and Jonathan's very familiar with this, I'm sure, just buy-sell agreements. I think too many business owners are out there. They wait until they're 61. They're thinking, I think I want to kick back at 62. And what do I do? And then all of a sudden, literally you get hit by the bus, and then the business is gone. And what do you do? And you can prevent a lot of those disastrous outcomes by just having a buy-sell agreement. And there's 3 different simple ways to fund it. You can save for it. You can take a loan out if you wanted to, but there's also a life insurance piece there. The thing we love about life insurance, if you want another great retirement vehicle, life insurance has some doom and gloom attached to it, and I get that, but it's probably the most tax efficient way of moving assets over, especially from tax deferred money to becoming tax-free money. And so for the people you love or the business, it's a great vehicle to be able to move those funds from one place to the next in a very cost-effective, tax-efficient way. So with that, I have
That
about
is
3 minutes.
extremely helpful. I really appreciate what you've shared today, Rob. You made me think of a couple of things I had never thought of as well. One question I have for you, as I'm working with a lot of startups, we have people, this is the first time they've ever opened a business or ran a business. They might be partnering with the small business development centers, looking for first steps. Do you have any advice for brand new entrepreneurs who are taking their first steps into the water?
Yeah, I think, there's a lot of different aspects depending on where they're at. I deal with a lot of different startups with a couple side ventures that I do. And, if it depends on where they are in the process. So if they're trying to bring an idea to market, then, you got to make sure you have funding. And do you know the right investors to be able to go to find the right type of loan to gain the capital you need to get your product or service off the ground? So that's where, folks like Bill are really helpful, or Jonathan or whomever. You got to make sure you have the right financial backing. Can afford that makes sense. You need to make sure you have the right marketing plan, so that way you can reach the right audience. So there's a lot of different, depending on where they are, that's why you sit down with somebody like Jolene to go ahead and go through that process, so we can really dissect where the business is at, so we can provide the right support partners that they need to get their business up and running and ultimately to be successful.
Excellent. Thank you so much. Thank you, Rob.
Yeah.
Is there anyone else on the Zoom that wants to ask a question? Or if you do, you can put it in the chat box as well. This is good information. This will all be available in the recording, and I can get Rob's contact information out to any interested party. As we get ready to switch over to our last speaker, we have Randy Voeller on from CorTrust Bank. I know he has his work cut out for him because we have Jonathan Sage Martinson here from the SBA, and we've got Kevin Weirs here from CNBC. And I know you guys all work together on a lot of the same and similar types of things. So as I asked Randy to present for about 10 or 15 minutes, we will still have about 10 or 15 minutes at the end. And I'd be happy to let Jonathan or Kevin speak for 5 minutes each about some of the things that you do as well, because I think it's important for our recording for people who will be viewing this in the future. And also I see Scott Johnson's on. He's from Excel Energy. Scott, you're welcome to chime in too and talk about some of the programs that Excel offers to businesses. I think, and especially we're focusing on startups and new businesses, but as well as expansions and relocations. So with that, Randy, are you ready to go?
I am ready.
I've got to
couple
give
of
you,
things.
yeah, I got to give you co-hosting capabilities. Were you going to bring up a slideshow this time?
No, I don't have anything.
You don't. That's fine. That's no problem. We're happy to hear your voice, and we'll let you go ahead and just take over.
Okay. A couple things, as Jolene just asked. I don't have a fancy presentation. Bill and Rob, you guys beat me up on that one, I'll tell you. And the other thing is, if you look at the explanation of what I'm to cover today, it does include the SBA 504 program, and then you sucker punched me by putting two great people on here who have a heck of a lot more information on that program than I do, but I can talk about it from the bank's perspective. So, you know, as a traditional bank, we are obviously in the business of every type of finance handling for individuals as well as businesses. And my job in particular is working with business lending. And so we do a wide variety, just about like every other branch or bank you'll run into, is that we offer lines of credit, we offer equipment financing, we offer building acquisition loans, a lot of different tools that we have in our arsenal that we can help businesses to expand, grow, and even startups, obviously, too. So, you know, and that, ironically, in all the years I've been doing this, you know, I do loans anywhere from $10,000 to $10 million, and each one is important, obviously, to the person we're dealing with, because it's maybe their dream to start a business, or it's their dream to continue the growth of that business. And it makes for interesting work, because you do get to sit down, interview people, and listen to what's really coming from their heart and how they feel about their business and why they are, you know, pushing to continue that growth. And we love to do that. I've got businesses that I started with 10 years ago with just a couple people, and now they're into a new facility and they've got 20 people, and the growth continues, and it's kind of fun to be there from day one and watch that activity occur and be part of it and help them with a little bit of advice once in a while, or just some new products that they didn't know that were available to them. So that's what I do on a daily basis. And in a lot of those cases, we do use outside help as well. And I'm glad that they're available, because it has made a lot of projects that otherwise wouldn't have probably happened, you know, become realities. So one of those projects, as we're talking about here, is the 504 program, and SBA has got a lot of programs. You know, they've got under their 7A program, they've got some monies available up to $350,000. That's kind of an easy entry product, if you will. The bank does their own paperwork and everything, but it still has to be approved and assigned a authorization number by SBA. So, but it does provide some of that money needed for maybe smaller companies or startups, because we can go anywhere from really, again, 10,000 up to that 350, and it's kind of a lighter paperwork load for the customer, if you will. And it really, you know, SBA depends on the bank's underwriting and our recommendation of approval in order to present that or to approve that. So, and then the other standard 7A loans that are available, I think, up to $5 million, I believe. I used to do a lot more SBA lending than I do, but one of the programs that I really enjoy using is the 504 program, and that's where both Kevin and Jonathan can help speak to some of those benefits as well as I can. But I've always told customers who come in, And I know that it's probably going to have to go down that avenue. I just tell them, look at this. This is a win-win-win situation in the sense that it's easier for the bank to get involved if we're only going to be in it at 50% of the project. SBA has a program, right? 504, they love to use it. They love to, their mandate is to help small business and help grow business, help grow jobs. They're in second position behind the bank. And then as an owner, as the borrower yourself, you can, for certain projects, get in for as little as 10% down, whereas a traditional down payment requirements, such as our bank makes, is 25% down. We'll finance 75% of a commercial building loan or redevelopment or addition or whatever, so the borrower has to come up with a bigger chunk of money on their own. But the win for them is the lower down payment. The win is that the bank's more likely to take a favorable look at this, knowing that we have less money at risk than we would conventionally. And of course, when we do that, we pull in people like Kevin or Jonathan's group, and we sit down and talk together with the potential borrower. We're working on one right now, and that's exactly what we do. We invite them in, tell us your story, tell us what you're doing, lay it all out for us. If we feel it's got some merit, we'll go to the next step and ask them to provide the paperwork and financial information that's necessary for our two individual entities to make a decision, to put together a loan presentation to be reviewed by, like, the bank's loan committee or the CDC's committee. And we hope that in the end we're able to help them out, and it's a great way to partner. Also, in certain situations, maybe the borrower has to come up with a little bit more money because it's a unique building, single-use type building, or a startup business where the SBA says we're not going to go in at 40%, it's a startup. So we've been able to, at least in my history, tap into a lot of other valuable non-bank sources. So some of those, I just listed a few that I've worked with. We've worked with the Initiative Foundation out of Little Falls, Dan Bullard and his team up there. We've worked obviously with the Wright County EDP in situations where we've got our revolving loan fund and we're ready to use it, and we partner sometimes with Initiative Foundation and share a position behind both the bank and SBA. We call that gap financing because there's a gap to be filled. The customer has a pretty good chunk of money down, but there's a gap. And if we all believe in the presentation, we understand, we look at the business and we say, yes, this is a business we can help. Now what do we do to fill the gap? These are the people that I call. You know, a lot of the cities, Monticello included, have their own active EDAs, and it's good to, if you're going to locate a business in Monticello, to go over and meet with your local EDA right away. Tell them what you're thinking, where you'd like to locate. If you're looking at buying a building, they can give you information on what buildings in town might be available. If you're looking for a new location to build from scratch, they can tell you that as well. And in a lot of cases, they'll offer services beyond maybe just involved in the lending part of it, but they may be able to help you, you know, in the case of infrastructure costs or deferred taxing and that type of thing. So good resources to have. Obviously, the CDCs, we work hand in hand with them, Kevin's group, like I said, and Jonathan's. And there are state programs out there too. There's a wealth of them. And today, I'm glad that Bill was here to talk a little bit about the rural development, because as a banker, I've focused almost exclusively on SBA over the years, because it was where I started. It's what I understood. And I know a lot of people who are in like situations like that. But again, even the USDA portion can partner, I would guess, in some manner, shape, or form, depending on where you're located, what their, business size rules are and all that type of thing. But one of the things Bill said, and that's what we all have in common, is that we're looking for job growth. We're looking to create jobs. We're looking to retain jobs. So in a case where a company comes to me and says, if I can't find a good location in Wright County or in Monticello or wherever it might be, I'm going to have to, probably go elsewhere. That's when we want to rally the wagons here and find out what can we do for you to keep you here. Because if you employ 20 people, those 20 people are going to go with you, and they won't be eating lunch in our communities and buying their groceries in our communities anymore. They'll be doing it elsewhere. So all of those things are important when you're talking about business development for a county-wide range, but also for us as bankers and non-bankers alike. So anyway, that's part of what I really enjoy, is that start to finish working with a successful project. And I've been lucky enough to work with both Kevin and with someone, now I'm forgetting his name, Jonathan, in your office, Chris. And I've done projects recently with both of those gentlemen, and they're both really good. They're well versed in what they do. They're very upfront and honest with the customers, so the customer knows what the expectation is from the very beginning. And that's vital too, because they have to know it's either going to work or it can't work, so that nobody's wasting each other's time. And I appreciate that when people are very forthcoming that way and handle themselves in that professional manner. So anyway, that's kind of a brief synopsis of what I like to do, what I do every day. And I work with businesses who generate $50,000 a year in sales, and I work with businesses that generate close to $50 million. So it's never the same 2 days. And of course, their needs and their sophistication, if you will, is a lot different. So you kind of have to wear many hats to understand where each of them is coming from. But that is an enjoyable part of the day. So with that, I mean, you got a couple of experts here too, like you said, so I would tap them from their standpoint on the 504 piece and leave you to it.
Thank you, Randy. I think of two things that I would like to comment on. One of the suggestions you made about somebody who's looking to relocate or to open a new business or to expand, that they reach out to their local economic development authority. Check and see if the community that you're looking at has an EDA or a community development director. They're going to be the first line of what's going to work and what's available. So I strongly encourage that. If you're looking at a community that's smaller and does not have an active economic development authority or community development director, you can certainly reach out to me as the county-wide representative for economic development, or the city administrator should have a pretty good grip on things as well. So that's a great suggestion. And then in our last 2 minutes of Randy's time, I want to see if you could encourage, if you have any words of encouragement for those individuals that are looking to start their first business ever. And, I think sometimes one of the hardest parts is this idea of finally going to the bank and taking the big step. And, you've written a business plan and you've worked on a marketing plan and you maybe even have some financial projections ready to go, but going in and taking that big ask. And can you talk a little bit about how to kind of get over that fear and that first challenge, and what a new business owner might expect at that first visit?
Right. I think the important thing you mentioned there is just being prepared. If you're prepared to discuss it and you have a passion for what you're doing, you're going to come across a lot less nervous. You're going to come across with some, I believe in this product, or I believe in this business, and you feel confident about it. That's a very, very big part of it. A lot of people don't know where to go to get that help for, like, business plan creation, or how do I start on financial projections and that type of thing. I know we used to use the small business development centers that I think it's still in existence, we used to partner with them a few years ago, the one that was out of St. Cloud State. And they offered that service free of charge for individuals to give them a call, set up an appointment, go in and say, I've got a plan in my head. I know it can be successful. What do I do next? Because, you know, you don't want to walk in with a lot of stuff scribbled on the back of a napkin when you go to see the bank or whomever you're going to first visit with. So market research is very important. Why is this business going to be successful? What makes you different from the other people who make widgets? And all those kind of things. Ask the same way you're thinking about it as the potential business owner. You need to portray that passion and that depth of information to the lenders, because as I said, I lend to a vast variety of businesses, and nobody knows their business better than the person who runs it. I'll never know their business as well as they do, but I learn from them and I watch what they do as they grow and who does it well and who doesn't. But yes, definitely come prepared. Have your facts. Have done your research, and it's a much smoother start.
Thank you so much, Randy, for that. And to let you know, we do still partner with small business development centers. We have a technical assistance provider on board that we work with. Her name is Bernie Berger, and to qualifying entities, she can provide assistance. I also have connections with Barry Kirchhoff and Lorraine Ross up in St. Cloud. And I know my predecessor, Dwayne Northagen, used to be a consultant and provide expert advice for small businesses looking to get some assistance on marketing planning, business planning, and financial projections. So we are still partnering with SBDC. Now, if anyone has any questions for Randy, you go ahead and feel free to interrupt us now or put it in the chat box. And then without being too imposing, I'm wondering how Jonathan or Kevin feel about spending a couple of minutes talking about what a day in the life looks like in your organization. Is that too much of an imposition today?
No, not for me. This is Kevin.
Great. All right, we're going to go ahead and let Jonathan go first, please. And then Kevin, if you'd give us a few minutes, I would be so gracious for that. Thank you.
Sure.
Great. Thanks, Jolene. Happy to just give just a little bit of add-on to what Randy talked about from Amplio Economic Development Corporation. Many of you know we were formerly SPEDCO, but changed our name in April to Amplio Economic Development Corporation. And just to reiterate what Randy said, for owner-occupied real estate, the SB 504 loan is a great option. There's a lot of advantages both for the bank and for the business owner for that owner-occupied real estate. I just mentioned rates are really, really low for 10, 20, and 25-year terms. It's below 3% at the moment. And because of the Economic Aid Act, there's also some great incentives that are currently in place. So there's 2% or more of fee waivers plus 3 months of free payments for projects that are approved by the end of September. So this, for those considering SB 504, it's a great time to pursue it. There's also 2 SB 504 refi programs for refinancing existing debt with expansion and without. And I just mentioned the Economic Aid Act changed those programs to make them more accessible to borrowers. And the new rules on those refi programs should come out in the next month here or so. So business owners who have debt that they want to refinance should be in touch with their banker or with a community certified development company like us, because those changes will make it easier to use. And then the last thing I'll say is Amplio Economic Development Corporation, we have a website that lists non-traditional financing. So this is financing that can be used in conjunction with the bank, like Wright County's program. Wright County's listed on our website. There's 20 different loan programs listed there. That includes the Initiative Foundation, and Wright County includes DEED and others. So that's a place for business owners to look as well if they're looking for non-traditional finance to use to help with down payments, for example, alongside the bank. That's amplioedc.com. Thanks, Jillian.
Thank you so much, Jonathan. I really appreciate your flexibility and your willingness to speak impromptu like this. It's a pleasure to have you here, and I know that you've got a lot of great things going on. If I could ask you one question, my question to you would be, how do you think a new business owner, what do you think one of their first steps should be as they're looking? I mean, for example, I've got an individual that wants to open a Mexican restaurant. They're not exactly sure if they want to build to suit, if they want to purchase the land and then build do their own construction, or if they're looking to lease a space. Is there any direction that you could kind of give a new business owner, or what would help them make decisions in those very first steps?
It's a great question, and with a lot of new business owners, it's one of their first questions, right? Whether to purchase real estate or to lease real estate. And for a lot of new businesses, leasing is the way to go. Usually the advice we give business owners who are looking to purchase is that's the avenue if they either need a location that isn't accessible or they're just not able to find the commercial real estate that meets their needs. That might be a special use, kind of a unique business that needs special kind of real estate, or they're looking for a particular location. The example of a Mexican restaurant where there might not be real estate where they think their target market exists. And because owning real estate is another big part of the business in addition to running the business. So you have to be really thoughtful about whether that's the right avenue for the business. And when it is, you want to look at, especially if you're new, 504 can help bring down that down payment, as Randy mentioned, which can be really helpful for startup businesses who are buying real estate.
Oh, you're muted, Jolene.
You would think I know how to use this mute button by now. Oh, goodness. Thank you so much, Jonathan. That is very helpful. And as we wrap up, we've got a couple of minutes left. Kevin, are you still on the line with us? Are you willing to speak for a couple minutes about what the day in the life looks like in your organization and talk to us a little bit about what you do?
Yes, certainly. First of all, I apologize for not having the video here. I'm having apparently some issues with the browser. It's not allowing me to do that, so I apologize about not having the video, but certainly I'll be more than happy to share some thoughts and comments about it. Again, just for everybody, my name's Kevin Weirs, and I'm Vice President of Central Minnesota Development Company, and we do business as CMDC. Similar to Jonathan and his organization, we're a private nonprofit certified development company that's authorized to originate and service SBA's 504 loan program. So a lot of people sometimes wonder, well, why can't the bank just do all of the financing? The SBA 504 program that we've been talking about, that Randy mentioned, is a program specifically designed to finance long-term fixed assets. Typically, that's owner-occupied commercial real estate, but it can be long-term. It can be equipment. Anything that has a useful life of at least 10 years can be financed under the 504 program. So the SBA does not originate those loans, nor does a bank originate those. Those 504 loans have to run through a certified development company like Jonathan's company and my company, CMDC. So that it requires this partnership amongst the financing groups, okay? And Jonathan and Randy did a real nice job of summarizing that. I think all I really want to do is kind of elaborate on the facts that, you know, it's such an amazing program that offers a fixed rate program. So often in commercial lending, rates are typically on a variable or something like that. And that's just because how financing or funding takes place in the lending community. They don't allow for long-term fixed rates, where the 504 program that we offer does offer fully amortized fixed rates for a period, as Jonathan already mentioned, 10 years, 20 years, or in the last couple years now, they offered a 25-year options. It's amazing. And again, on that 25-year rate, the effective rate for the May fundings was 2.936. So it's unbelievably low rates, okay? So when you partner that with a lender, that their rate and the 504, there's a blending there that takes place that really offers some really attractive financing there. So And the other piece of it is the flexibility on the program, as we already mentioned, the previous folks mentioned, is that in this, we often refer to it as this 50-40-10 structure, that 10% equity injection that is typically required to come from the small business owners can come from other sources, as you know, that we are often referred to as gap financing. So there's just a lot of flexibility that's associated with that program and our program. And it's really, we often say it's a win-win-win situation, because lenders like it because they're in a superior collateral position. The small business owners like it because it's a lower down payment and have a fixed rate option. So, and of course, the Small Business Administration likes it because they're assisting small business owners. So, again, it's just one of those great programs that's very flexible, and there's some incentives that are out there right now, and again, until the end of September, that if small business owners are in a position or considering making a move, now would be a great opportunity. Still on mute.
Still super helpful. Thank you,
Yeah.
Kevin. Before we wrap it up, I have a couple of things I want to run by you, Kevin. Let's go with our earlier example. Let's say you have a Mexican restaurant, but you already have a couple of locations and you want to open a third location in a new community. Is that a type of person that could qualify for one of these loans? And then to ask the additional question, if they are a minority owned or a woman owned business, is there an advantage to working with your certified development companies? And does that have any impact on the final decisions that are made?
Good questions. Let me touch a little bit about that issue, and when you specifically the last questions as it relates to minority owned or woman owned. In Jonathan's and my world, we represent the SBA, and in short, we're lenders as well. So we look at lending from a credit capacity. In short, the ability to repay the loan back, and that's certainly important, right? All lenders want to be repaid. But in addition to what we analyze from a credit standpoint, and quite frankly, probably the most important piece of what our jobs are as development representatives is focused on eligibility. Okay, it's one additional area of analysis that we have in the SBA 504 arena that commercial lenders typically don't have. So to be truthful, in a project where we probably look at it, if there's going to be any challenges, it's typically focused on eligibility. So the program being a government program, you have to kind of fit the boxes and check the boxes, right? As lenders, when you've been doing this long enough, you have a fairly good idea if some company has the ability to pay their loan back, typically based off historical financial performance. But it's the eligibility that more often causes some challenging issues when it comes to SBA. So quite frankly, my recommendation, and I really encourage small business owners or anybody that's looking at doing something to engage their banker, and at the same time, or even probably before, contacting somebody like Jonathan or our company to talk about the program so that we can identify those potential pitfalls or eligibility issues. Okay, so that's what would be probably my takeaway recommendation, is emphasizing the fact that getting us involved early to identify eligibility issues is critical. Now, to answer your question specifically, yes, a small business owner that's a minority owned or a woman owned business certainly makes the project eligible from getting into the program. Okay, where somebody that is in the metro area that doesn't meet some certain eligibility criteria, it's more challenging to make sure the project is eligible. But yes, a small business owner that is a woman-owned business, and SBA defines that a woman-owned business is a small business owner that is at least 51% owner occupied qualifies as a woman-owned business. Now, I always kind of like to clarify this. We often sometimes see structure where it's a husband and wife, might own a business, for example, and they make the wife 51% owner. But unless she is active in the business, that doesn't qualify. The key component to that and clarification point is, in order to qualify for a woman-owned business, a combination or an individual, a woman, needs to be owning 51% of that and be active in the business.
That's
So-
excellent. This has been a fantastic opportunity for us to learn about the basics of funding for small businesses, for business investment and retirement, for the USDA programs available through rural development. It is 4 o'clock. I feel like we had perfect timing. I hope everybody had an opportunity to share the messages that they wanted. This has been just packed full of great information. And so again, I just want to thank everybody, especially our impromptu guests that were available to speak at the end. And you can always reach out to me at jolenef@wrightpartnership.org with any additional questions, concerns, or ability to contact our speakers. And with that, I think we'll let everyone go. Have a wonderful afternoon.
Thank you.
Thank you.
Thank you.
Thank you.
Thanks.
Yep.